Hey traders, Akil Stokes here of Trade Empowered, and welcome to another weekend review video. This week it's going to be a little bit different. I don't have any charts to show you. I don't have any new trade setups to show you. It's really been a dull week, and mainly because it was the end of the month, and then of course we have the non-farms report coming out tomorrow. We had the ECB press conference today, and well, the markets are in wait and see mode for the most part. So just not a lot of trading opportunities out there. So for the most part, just sat on my hands all week. Only took about 3 or 4 trades max, I think. So when that happens in the live room, we do have 3 hours a day. It leads to a lot of great discussion. And what I'm going to do in today's video is I'm going to flash you back to a live room session from today, Thursday. I'm also going to show you portions of a live room session from either Tuesday or Wednesday. Now, in the first video, you're going to see us break down a trade. And what I do is I like to encourage discussion in the room. I'm not the type of teacher that says, this is how you should trade, only trade this way. I like to see what is your trading style and how can we go about making that more efficient, more consistent, and putting you in a better position to be consistently profitable over time. So in the first video, you'll see me walking a trader through a potential setup that they wanted to get involved in, and kind of leading them on the path to getting that trade plan secure and having something that they can consistently use in the future. And then in the second video, I get to talk a little bit about money management and share some of the work that one of the members of my 12-week transformation training course has done. So enjoy the first video, and I'll talk to you right afterwards. That's the next thing you need to know. It's one thing, guys, and this is, and again, appreciate you. So many people come into the room and they're scared to give their opinion because they don't want to look like that trader in front of everyone else. None of you guys know each other. Maybe. So but this is how we learn, guys. We learn by making a case for argument. Yeah. This is we learn by putting our opinion out there and then discussing it. So again, for me, this wouldn't be a trade I can take. Why? I'm not a trend continuation trader. I'm not shooting for targets down here. I'm too scared to do that. Why? Because I'm also a counter trend trader, guys. So as soon as the market comes back to retest its structure, my little antennae stick up and I start saying double bottom, retest the structure, RSI divergence. I start thinking of every single counter trend reason to buy right here. And what's that going to do for me in the long run? I'm going to psych myself out of every trend continuation trade, right? Every time the market does this, what's going to happen? I'm going to start sabotaging myself and taking targets early because I'm mentally tricking myself out of the trade. A lot of you guys have been here before, right? The market's going to shoot down. We're going to do something like this, put in one of these bars, and I'm going to be like, oh my gosh, buying pressure, just get out the position. And I'm never going to see my position out to its entirety. And what's that going to do for my risk reward? Well, I'm going to consistently take less on my reward than what I'm giving up on my risk. Because we always get stopped out for the full amount, right? Isn't it funny how that happens? We take targets off early, but we always get stopped out for the full amount. This means that I've got to win a lot more than I've got to lose, which means I've got to be I've probably got to be about 70% trader. I'm not a 70% trader, guys. I'm sorry. I'm not. I wish I could be. I've tried for years. At max, I'm about 65. At max, I'm usually between 50 and 60. I've accepted that. All right. So this is an opportunity that works for me. This is an opportunity that works for me. For someone that's a true trend continuation trader, it does work because they're looking for an extension. So the risk reward is in their favor. So we've already identified that for a trend continuation trader that's shooting for first targets at that Fibonacci extension, the risk reward works, right? We've got Fibonacci, we've got structure. So you have an area that you like. You have a trade that you like. Now that you have a trade that you like, the next question we need to ask ourselves is, how do we enter that trade? And it's important we split up the two. There's a big difference between finding a potential trade that works with our plan and then how do I enter it? What is my tactic to get involved in this trade? And that's going to differ depending on who you are. For some people, you may need a pin bar. For some people, you may need a lower low, lower close. So you may need the market to do something like this. The market to come up here, give us a candle, and then give us, a candle that breaks and closes below it. And that's your reason for entry. Some of you may need a double top. Some of you may need the market to continue up here, retrace a little bit, come back up to retest. And now that you have that double top, that's your reason for entry. And that's how we add confirmation into our trades, guys. That's how we kind of keep ourselves in the highest probability trades. Now there's pros and cons to it. The pros are that, if you're someone that's waiting for a double top or a lower low, lower close, and the market does this, you never entered the trade. Your money was never at risk. You never got stopped out. You were never in it. The cons are, if this thing turns around right now, you never entered, you missed the trade, you didn't get this profit. So there's pros and cons to how aggressive you are as a trader. And that's going to be up to you. That's going to be up to your trading personality. How risky are you? For me personally, my number one rule of trading is conserve capital. Don't go broke. So it's more important for me to get confirmation on an entry. Or let me put it this way. I would rather miss a winning trade because I didn't take an aggressive approach than enter a losing trade because I did. Because we just talked about this, right? We just talked about what hurts traders the most. Giving back the money. It's not making the money. We can all make money, right? We can all find a winning trade. Most of our problems is we give it away too quick. You guys follow me? You with me? Good. So what I would do here, Carmen, is you did a great job of identifying a level, right? You've got structure, you've got the RSI. Or you got the 618. The next thing I would ask myself is, what is my reason for entry? You said pin bar. Wait for that pin bar. It's even worth doing this. What I like to do is once I identify a zone on a price chart, this is when we go to our lower time frame. We talk about using 3 time frames, right? We have our higher time frame where we do our top-down analysis, our bird's eye view. We have our trading time frame where we do the bulk of our analysis on here. We look for places to enter and stuff like that. Then we have our lower time frame where we look for our entry reason. So if you like this level, I would do this. I'd go down to a 15. That's typically the next time frame after a 60-minute. I would say, you know what? RSI is overbought. I always get those confused for some reason. RSI is overbought. I'm going to wait for a lower low, lower close and enter the market, next bar market. You can either even do, I know Jason's been working in the war room about buy stops and sell stops, stuff like that. You can use one of those orders and play for the breakout. That's the more aggressive approach. You can also wait for a pin bar. Now make sure you define what a pin bar means to you. Is this going to be a pin bar because it has a high wick? Or do you need one where with the true close and no wick below, something like that? If you're going to use a candlestick formation, make sure you define it because some of these candlesticks can get pretty wacky. Those are going to be your more aggressive approaches. Your next one is going to be waiting for a retrace, waiting for a retest, looking for a double bottom, seeing if you get some RSI divergence on here. That's going to give you some more confirmation that the market's rolling over. It may not happen. You may miss the trade, but again, that's weighing the pros and cons of it. And then also, here's the thing. If you want to reduce that risk, right? And we'll head out for our break soon. If you want to reduce that risk, what do we know about double tops and double bottoms, guys? How do we play stops on double tops? Someone, anybody, right now. How do we play stops on double tops? 3 letters. Or how do I play stops on double tops? I don't know what you guys do. ATR, right? So if we get a double top right here, because we're on a lower time frame, let's say we're going to get a different ATR. ATR is going to be 13. Let's say we take a 2 ATR stop. Let's go 64 plus 13 is 77, 90. All right. A 2 ATR stop is going to put you right here, 111.90. Check this out. New risk. That's my risk reducing sound effect there. Risk is like this. Reward is like this. Does it look any better to anybody? Is it a little riskier? Yep. But how often can you lose a trade like this? How often can you lose a trade like this? I'll tell you. You only have to be right 1, 2, 3, 4. 1 out of 5 trades and you're essentially break even. Sound good to anybody? 20%. Technically 1 out of 4, 25% if you want to make some profit. Also, this can mean this. Those traders that are scared, like me, I hate using scared. It's such a bad word. Those traders that are cautious, instead of taking an extension all the way down to the 127, look what you can do now. You can roll targets up to structure where you feel a lot more comfortable. And we talk about taking feelings out of trading, but they're in there. We want to base it around our psychology. And now you still have a good risk reward that you can take, where you only have to be right 1 out of every 3 times to break even. So we can always make it work. You just got to know how to. Now, again, keep in mind that when you reduce this risk, guys, I don't want to seem like this is the greatest thing in the world. When you reduce this risk, understand that for a true trend continuation trade, this market could still reverse all the way up here. So you've got to be willing to take the trade again if you get a second opportunity. You got to be willing that if this first opportunity gets stopped out, you've got to be willing to say, wipe the blood off wipe the blood off your body from the loss and just be willing to reload and say, hey, look, I'm going to take it again if I get another entry reason. You got to be willing to do that. If you're not, then this tactic is going to be wasted on you. So realize that. But I mean, you can make the trade work. You can make the trade work. So take that. Canada. I've been watching Canada on the range bar. We talked about this level earlier. We talked a lot about building a case for entry. One of our better live room discussions. I think we're going to be a little short, but if we go down to a range bar chart, and this gives us a slightly different look at price action. If we take a Fibonacci retracement and go swing high to swing low, we're going to have a 50% retracement here. When we see 50% retracement, we automatically think bat pattern. X to A to B, B to C, C to D, 111.60s. Guys, if you were a trader that liked Canada, I'm not sure what Jason talked about in the war room this morning, but if you liked Canada, if you're like, yeah, we're at structure, trend continuation, and then you got scared away when I talked about needing to find a reason for entry, like, man, Akil, you blew it for me. Right in front of you. You've got a reason for entry right here. You can use pattern. You don't just have to trade patterns as patterns. They can be entry reasons. You don't have to trade it like a pattern. You can simply use this as a reason for entry. You can say, I'm looking to enter at 111.60s. I'm going to jinx the market and it's going to go backwards now. This is how it always happens with me. Do we have news coming out at 10? 1 second before I pause this thought. I don't think we have anything else today. We'll see. Forex Factory. Factory orders. And natural gas. That shouldn't affect us too much. All right. Anyway, bad pattern completion, potential bad pattern completion at 111.59s. Stops need to go above our X leg. We're on a 5 range bar chart, so a 2 ATR is going to be 73. That should be right around 113 Fibonacci inversion as well. Let's go X or A back to X. $113 is even a little lower than that, 68. Not a bad risk reward. Not a bad risk reward. I think very similar to what we talked about before. You're risking this much. And again, depends on how aggressive you are. If you're a trader looking to take it all the way down, you're risking this much to potentially gain this much. If you're a little more conservative, you're looking at a retest of structure here. You're still looking at a pretty hot risk reward here. Cool stuff. I'm actually gonna get some orders on this. If I can get this thing working. Come on. Let's do this. Let's do it up here. There we go. So we're buying 10K up top. We're buying 10K down the bottom. I'm buying 10K. Again, I'm not a trend continuation trader per se. So I'm not looking for any type of extension. I'm going to see if I can get about 27 pips, 20 pips or so in the bag up here. I'm going to move my stops to break even like we talked about earlier. And I'm going to see if I can get a home run with a continuation down here. So we'll see how this plays out. We'll keep this on. I don't like watching numbers like this, guys, but I know a lot of you guys do. It helps you build confidence to know that I'm still in a trade. I'd personally not watch the numbers because they'll drive you insane. They'll make you go crazy. Let's go to dollar yen. All right, so I hope you guys enjoyed that. And again, that was a walkthrough of an idea that was on the dollar Canada, and we took it from just being an idea to, you can see by the end of the trading day, an actual trading opportunity that I got involved with. Now, that trade ended up being a loser, and I know a lot of you guys are out there, Akil, why are you showing me a loser? I worked through all that, and it lost. What's the point? And insert negative comments, negative tweets, negative whatever here. Look, guys, if you're gonna come to me with negativity, I have no room for it. So I no longer waste energy on responding or trying to justify myself to those who are going to be negative. I strictly spend my time with those who are willing to learn, and those who are willing to learn, they're going to take more than just the result of the trade. They're not going to look at this and say, "Well, it was a loser." No, they're going to look at the process. And they're going to learn from that process and implement maybe some of the techniques and skills that I used in this in the video I just showed you to help with their trading for the future. And those are the type of traders I want to work with. So if you're going to be negative out there, just expect no response. I apologize, but I'm not going to make you famous on my behalf. So check out this next video. We ended up having a discussion about money management. I think it was either Tuesday or Wednesday session about money management. And it was a trader in my 12-week transformation course that started going through the back testing process and really, going through each pair and seeing what's profitable and what's not. And what was delightful, what was great about this video is that, we don't just trade every pair out there. When we go through the system or the process of condensing a portfolio, we want to take our strategy. We want to take the pairs that we tested, and we only want to pick the best performing pairs. Now, you do want to have some hedging to a certain extent, but let's not talk about that for now. You want to pick the pairs where the strategy performs the best, and you'll see in this video the difference it made to this trader's equity curve. He said, hey, I'm going to take out the worst performing pairs. I'm going to keep the better performing pairs. And it just smoothed. Look at the difference it made. Same data, but instead of going from 0 to minus 50, it looks like, to up to 600, to back to 200, to up to 700, he went from 0, cut that drawdown out, still got ebbs and flows in the market. You're going to see this, guys. It doesn't just go in a straight line. If it does, let me know, and I'll give you all the money in the world to invest. But this is a beautiful equity curve. Look at this. There's barely any pain in this. And this is during September. And September typically stinks for patterns. At least this September has. And he's went from 0 to $1,800. So this is a good example. I mean, this is kind of, we don't do this much in the room, and we don't, because it gets deeper than this. So you won't see this in our YouTube videos or our Jason's FMP. But when you're serious about trading, this is what you got to start doing. You dig deep past that initial layer. The initial layer is learning the stuff, learning the skills. That's easy. I can teach you a pattern. I can teach you structure, all that fun stuff. It's easy to do. It takes time. You gotta build and work on that skill. But it's no different from learning how to ride a bike. You put enough work in, you'll do it. The next question is, and this is where we want to help traders at, the next step is, how do I take what I learn and how do I maximize it? How do I make it as efficient as possible? And I mean, I can't show this enough. This trader took an equity curve of this and turned it into this. So going back to your question, Jason, we talked about what is the ROI? It depends on your portfolio. If you're going to be a cowboy and trade, every pair in the world because you want to, you may have an equity curve like this. If you decide, hey, I'm going to take less pairs, I know that's going to mean less trades, but it's going to have a smoother equity curve, you may have a return like this. This is stuff right here that separates the pros from the average Joes. And it literally has nothing to do with a skill set. This is the behind the scenes stuff, guys. Now, again, I told this trader he needs a lot more data in his back testing, but he's off to a great start. One month of back testing isn't going to show you anything. We can have hot months, we can have cold months. It's going to happen. So 1 month isn't going to show you anything. But when you do this over a year, when you get 100, I mean, for this trader who's doing a lower time frame, but when you get 100 trades under your belt, it's going to give you a pretty darn good idea of what pairs are profitable, what pairs aren't, what pairs are really profitable, what pairs are just a little bit profitable. And then you switch stuff around to maximize your portfolio and minimize your exposure. And that's the next level stuff. That's the next level stuff. I was so happy to see this. Because you don't understand how many, I mean, we get people that come through the course but never utilize what's learned. They come in there looking for a shortcut instead of putting in the work. They expect, hey, I'm going to be in this training course for 9 months, or not 9 months, for 3 months, and then I'm going to come out and just be super profitable right away. No. 3 months is just the beginning. 90 days is just the beginning. 90 days is just the beginning. You've got to put in hard work afterwards. All right. So sorry about that little rant, guys, but I feel that was necessary and impactful for some of you guys, hopefully. So that's it for this week, guys. I hope you guys enjoyed it. Again, it's a little bit different than what you're used to, but hey, it's better than nothing. And again, if you can, my idea whenever I watch videos, if I can find one thing that is inspirational, encouraging, motivational, if I can find one thing that will help with my trading, then the video was worth it. So be careful out there in the markets tomorrow. Non-farm payrolls. Last month, the market did not care at all. Not sure if we're going to see that again, but I'm going to stick to my rules and stay out of the market until at least all the fireworks are done and the smoke has settled. But until next time, guys, plan your trade your plan. I will see you guys in the market tomorrow.